Sandeep Tandon joining us this morning, founder and chief investment officer, Quant Capital. Sandeep, thanks so much for taking the time and for speaking to us today. Of course, at times like this, markets kind of take a back seat. But your opinion on how investors in India should react to geopolitical tension, the response, and the strong message that was sent out by the Indian administration to a dastardly attack that was taking place not too long back?
The market is a very evolved animal now. Okay. So if you really look at for last many days, I think government, including a prime minister, having meeting with multiple people, bureaucrats, you talk. What government has done very smartly and tactfully is that it has prepared everybody. Okay. And that's the reason I strongly believe up to large extent, everything has been factored. Okay, some people who are weak heart has already capitulated. Some people have, from a risk perspective, have pruned down their exposure. We as a house look this as a buying opportunity, so we have increased our exposure. So we have all sort of animals available in the market. How you look at. I think it's a very very mature way they have handled the situation, and I think I like to remain constructive for India FI is coming back, and we have been saying for last 2 months now that India is in a risk on phase as compared to global risk off phase. And we also talked about in our last note, talking about how decoupling phase has already begun for India. So I think if you look at an absolute basis, you might have some concern, but I look at absolute and relative both. On a relative basis, we are in a very comfortable situation. So net, I will look for a buying opportunity if market corrects. First of all, I don't expect any major correction because up to large extent it has already been factored. And if it is already factored and this event has already played out, which has government has very clearly says that is a more not attack on Pakistan, not attack on the establishment, is an attack only on the terror camps. So I think they have support from the other global players in the market, and I think it's a tactical way they're handling this situation. And I don't think one should need to panic in this situation. Rather, I will be buyer on this every level if whatever reason market corrects, which first of all, I don't believe so that market will correct with this background. As I said, largely factor. If it happens even, then I should look for a buying opportunity.
That's an important point that you're raising. Sandeep, just to drive home the point, you've obviously seen many events like this in the past, but this, in my opinion, is different from those because the first instance of something being televised and showcased to the Indian public to say, look, this is what we have done, these are the camps that we have targeted, this is the information that we had, and we have reacted according to that. There's also a different scenario in terms of the structure and the makeup of the market as well, right? So if you're talking about even 5 to 8 years back, when the domestic institutions and the mutual fund industry did not have the firepower that it currently has, and you as a representative of the industry saying that you will go out and buy, how much of a factor is that in keeping the stability of the market as it stands right now?
So if you look at without any biases, mutual fund industry is sitting on a very large amount of cash. Okay. And this concern of Indo-Pak tension has come very recently. I think the cash level has increased because of a global trade-related tariff is going out from January. So if you look at from that background, is very constructive. When cash levels are so meaningfully high, okay, the leverage position has corrected a lot, okay, and the participation is completely missing. In fact, if you really look at in last 15-20 days of buying activities which is happening in the market, is like largely FIS has come back, with which they were seller for last many years actually. Okay, so after long period of time, seeing FIS is coming back, and domestic guys are slightly nervous because they have made a lot of money in the past, and any signs of any disturbance which is there in the more from a tariff perspective has psychological hurt them, because many investors are seeing now 1 year's negative return. So some amount of concerns are coming. I think the way I look at the market is that you don't have to look at for next just last 6 months or last 12 month perspective, because equity market a long term. Okay, if you're looking for 5-10 years perspective, I think from a longer term perspective, I think it's a great opportunity. And I will have a very constructive outlook in this background rather getting panicky, because the government is handling with a lot of maturity. global forces are behind us. So we have huge psychological comfort. As I said, leverage positions is missing, FIs are buying. If you look at all combination, okay, then I think all combinations are endorsing a up move rather than a down move in the market on the immediate basis.
Sandeep, hi, Mahima also joining in. Just wanted to understand one thing. You did mention that according to every factor being considered, the market might see an up move. But you also mentioned that India striking back was kind of priced in the markets. But if Pakistan retaliates, do you think that is priced in the markets already, or do you think then we'll some kind of we'll witness some kind of a dip in the markets?
See, if you really look at the way we understand geopolitics, okay, I think they were also prepared, okay. And most of the camps, I'm confident a lot of people could have already vacated because it was very clear that Indian government and Indian para forces will react, okay. So I don't see any meaningful casualty could be there, and it's all about how Pakistan should react. But I think given the background, they also understand you're dealing with a different India. It was not what happened in the 1971 or in the past what you have dealt. Last 10 years, India is in a very different league, both from arm perspective, status perspective, and in terms of global say perspective. So we are in a different league. I don't think Pakistan is in a position to really retaliate up to that extent of what he could have done 10 years back. Okay. And economically, they are in a very awkward situation. So maybe there's some noise can be there, which I'm not ruling out, but I personally don't see them reacting in a big way. And government has made it very clear. If you heard the speech of the finance secretary, very clearly saying that it is targeted towards terrorism, not on Pakistan, not on the military or any of their establishments.
The messaging is very clear. Yes, absolutely, Sandeep. I'm just going to ask you about what we found very interesting, right? You had last evening a major trade deal announced between India and the UK. We're having conversations with the US as things stand right now. Global players, possibly an EU coming through also with a bilateral agreement. So on one hand, you have a very strong response to a terrorist activity that is taking place and a targeted reaction. And on the other hand, you have a very clear laser focus on trade that could have a significant tailwind for several companies here in India. How do you look at this context, and where would you be setting your sights? If you were to talk about these trade deals coming through, who stands to benefit in your opinion?
See, it's an interesting question in this current context. As you said, FTA has been silent. Actually is going on for last 2 or 3 years, actually. Okay. Finally, it happened. Okay. So again, a very constructive message to the global investor that India is moving forward very fast on some of these bilateral issues, which has been pending with various countries for a long period of time. And I personally believe that India will be one of the first few countries, or maybe the first country also on a large size, who is signing the bilateral agreements with US also. So again, there will be a strong messaging if it happens quickly. Okay. With that background, I think global investors are definitely looking at India as a safety perspective. Let's say the money shift from US to, we always talk about Asia-centric emerging market, and in India particularly, there could be tsunami out here because even 10-15% money shift from US. That's the first aspect. And because risk appetite indicators of emerging market as compared to developed markets are endorsing that liquidity can shift. That's the first important point you have to understand. Second thing is that India has sheer size. Okay. One side, if you compare, let's say example, like we always talk about Vietnam or Bangladesh from perspective, they are giving competition to us. But now with the tariff is much more. So we have tariff differential in our favor. And second thing, what we have to understand, India has scale. Okay. Other countries don't have that much scale what we can build maybe next 2-3 years perspective. So I think we are in a very unique situation, okay, where we are saying that not only from US perspective, Europe perspective, and even Middle East perspective, India will be a preferred place for doing business. So the way current government is endorsing, talking about ease and making very fast move. In the past era, we have seen, such decision will take a decade, and maybe most of the time decision will not happen. So I think the current government is very, very agile, and understand the needs of the hour, and they're moving very fast. It's not a signs of weakness that we are surrendered. A lot of articles or the media people talk about. My view is a very strategic decision that the Modi government is taking, and it's absolutely step in right direction. And I think with this background also is a very constructive news for India. Again, I said you also have to look at relative basis, because money shift on relative basis, not on absolute basis.
Sandeep, last point that I want to ask you, and it's evident from your fact sheets as well, and we'll go through the numbers, I'm sure, on your overweight stances and what you're buying and what you're holding. Since you've said that you've been deploying and you're constructive, just leave us with a thought as to where you're seeing the most opportunity, which spaces you would be deploying in.
See, I tell you, obviously, right from January, when we talked about tariff-related thing, we said let's focus on India-centric companies. So India infrastructure company, Indian hospitality space, okay, and up to certain extent materials also. But given the changes which is happening as we, let's say FTA with UK has been finalized, if something we move forward with European countries or with US in particular, I think pharma is one area where a lot of people have given up completely and people have very concerned about it. I think India is in a very unique situation. There is no competition globally on the generic perspective. So Indian generic company, Indian textile companies are two clearly winner. And obviously the textile, the size of the overall industry is smaller than the pharma. So from a value perspective, pharma companies will be the biggest beneficiary, and that's where we have added. And we also added some small quantities also in the textile space, as given the size of the activities or the volumes or the value terms, these companies are relatively tiny.
Sandeep, thanks so much. Appreciate the time that you've given us this morning. Pleasure speaking with you.
Thanks a lot.